What's up, everybody? We're back with another episode of Bullish Chips, where we use a proven and repeatable strategy to make money every day. This channel happens to focus on the Bullish Semiconductor ETF, which goes by the ticker symbol SOXL. But the charting method and the trading method that we use can be implemented with any company that's publicly traded in the US stock market. So make sure you hit that like button if you enjoy this video. It really helps the channel grow. Thanks to all those who continue to tune in. Give us a thumbs up. Leaving the comments down there in the comment section. We love the interaction with you guys. So thanks again. If you haven't already, make sure you hit that subscribe button and the notification button as well. That way you are alerted to the new videos we release. We have been starting a nightly video prep series. So if you want a little bit deeper dive into how we set up and get set up for the nightly videos, it was a request by a couple of people. So we went ahead and started doing that. We'll have that out tonight after this video. Actually, I don't know. I might put it out tonight. There's not a whole lot of changes that needed to be made other than just moving like the previous high a day, previous low a day. So we'll see. I think I'm going to stick to more eventful nights to really post, but we'll see how it goes. Anyway, the nightly and weekend videos like tonight's video, we focus mostly on triggers and targets for trades ranging from scalps and intraday trades to swings and leaps as well. So if you want, again, if you want a deeper dive into exactly how we set up the charts to get these levels, make sure you check out the bonus content on our YouTube page. If you're not familiar with the strat, and this video can move kind of fast for you. If you're not familiar with the strat numbering system, it's just a 1, 2, or 3 system, right? A candle can be a 1, 2, or 3. If you're not familiar with that, check out the description of this video. There's a link to a free PDF for a quick reference guide for the strat and strat reversals. It's one page quick reference that just goes to show you how easy it is to pick up the strat. So I do encourage you to check that out if you're not familiar with the strat. I'm not saying you need to use it, but you might find that it's probably one of the easiest ways to look at price action on a chart. But anyways, I encourage you to watch the full video. We do go over triggers and targets, but we go over all time frames and give some pretty good insight on all time frames. So hang with us through the full video. I'm sure you'll be glad you did at the end if you're not familiar with this channel. So let's go ahead and take a look at the agenda for tonight's video. We'll go ahead and recap price action from Thursday, January 8th. Then we'll zoom out like we always do and look at the week, month, quarter, and year charts. Then we will take a look at what the market maker's expected move is for Friday, January 9th. And finally, we will zoom back in, set the 4-hour markers and triggers and targets for Friday, January 9th. And we'll do a quick review of the triggers and targets for the week, month, quarter, and year. All right, so let's get into the charts here. Let's pull up the 5-minute. That's where we always start every day. This is where we can take advantage of the proven and repeatable strategy that we have. All right, let's make it bigger so everyone can see it. I know that has been a request of some folks recently. There we go. I think that should be good enough. All right. So, let's get the right chart up here. We need our scalp chart from today. There we go. So, what we have here is the opening print, right? So, if you're not familiar with the channel, very simple strategy for early morning scalps or early entries into bigger trending days, right? The first thing we look for is opening print, right? Wherever the opening print is, we're looking for, are we going to get higher lows at or above that level, or are we going to get lower highs at or below that level? So once we have the opening print, if we get higher lows at or above the opening print, we want to look to get into calls. The target normally for those calls will be previous high a day and overnight high. Whichever one comes first is the first target, and whichever one comes second is the second target. On the other side of the coin, we look for lower highs at or below opening print to get into puts. And we want to target overnight low and previous low a day. Whichever one comes first is the first target, and so on, right? So here we have opening print today was 51.79, and we got an immediate push down, right? So once when you see that first 5-minute candle being as large as it is, a lot of times it's a good idea to go ahead and switch to that 1 minute, because if it's just gonna fall out from get-go in the morning, your best chance is probably going to be on the 1 minute, right? So in here, there was a lower high on the 1 minute, actually made just like a little bear flag. We went ahead and entered here, and we got the lower high on the 1 minute and we started falling, right? And just started falling, got to the gap, poked into the gap. We talked about intraday, how tops and or bottoms of gaps can be bounce points, at least intraday. And that's what we got initially, that bounce. Then we came back up here and basically had to resolve this 78.6 fib of this holiday bull flag. We've been pointing this out over over this week, right? It's the bull flag that emerged basically on the 1 hour chart from December 18th to December 31st, right? There was a flagpole and a flag, and these are the fib extensions from that. So we tried to resolve the 78.6 fib level. It's lines up kind of with this weekly downtrend level. So again, we don't put a lot of weight into downtrend lines by themselves, but if they interact with our more important horizontal levels, then we give them a little bit more weight. So you can see it poked up to that. I don't want to say to the cent because this is just a trend line. I'm not worried about to the cent, but it went to that general area, which coincides with the 78.6 fib. And it failed it, right? It made this lower high here and went down, and it looked like it was going to close the gap, but it actually has left a little bit of that gap open. It went back up, but then again, gave us another lower high. Once we got this higher low here, we went ahead and exited at the top of the gap. Once we got back above this higher low, once this higher low was established, right? Once this candle right here went above the high of this candle, that locked this candle in as a higher low, and we went ahead and exited our position. We actually exited the full thing because it was a pretty decent move, and if we were going to get more downside action, there was going to have to be some type of pullback. Well, pullback in the sense of opposite direction of down. So it would have to push up a little bit more to, get a little bit more bulls basically to buy in or get trapped. And so that's what we started looking for at that point, is just let's sit on our hands and look for a lower high on like the 15-minute or something like that. Maybe even the hour if we have to wait that long. But we never got it, right? We got that slow grind up, got these higher highs and higher lows on the 5-minute. But we were still so far below opening print and below previous low a day, overnight low. If we take a look at the internals, where's my internals? Let's maximize this, right? The tick, even in the afternoon, was just sitting around the zero line. There we go. Vol QD, same thing, just basically sitting at the zero line. What's going on with my chart? Why can't I move it? Let's go back. Let's get out of there. There we go. So, Vol QD basically at the zero line. ADQD just sitting on the zero line as well, right? So there's the zero line, nowhere close to trend higher zone, right? So there was no real reason for us to want to get into calls at that point. Oops. Let's get back over to the big chart, right? And from a risk reward perspective, I could see that being an entry for a lot of people. Gap was basically closed, made a big move on the day. It would be a good bounce point to enter into some calls, but I wouldn't be staying in them too long, right? At this point, we've turned into a downtrend on the 1 hour. We still have yet to lock in a higher low on the 4 hours. So, we could have more downside to go through. We'll see what happens tomorrow. We've got jobs numbers tomorrow, employment numbers. Jobs came out Wednesday. We got employment numbers that come out Friday, so those will probably affect the market, and we just got to see which way we're going to go. But not a whole lot else to do today after that first push to the downside. Pretty sideways after that. If we're a scalper and we're able to get in down here off the bounce and get you a little bit of profit to here, I'm happy for you as well. There's no one right way to trade. We just happen to talk about the way that we particularly trade. So hope everybody did have a successful day today. If we look at the 1 hour, like I was talking about, let's get a little cleaner chart here. If we look at the 1 hour, we got this high, lower high right here. Is this going to be another lower high? We'll see. But we've got this low, lower low, right? So we've at least started a downtrend on the 1 hour. It's not steep, it's not heavy, but it's started, right? So we've got to see. After hours, we started out pretty positive, but it looks like we've kind of come back down and almost flat again. So If we go down in that first 4 hour the first 1 hour candle on Friday, that locks us in as a lower high. And then at that point, we just have to see, are we going to close this gap and make a lower low? And if that's the case, we're really back into the downtrend, and we start looking at this market maker's expected move low. If you're not familiar with the market maker's expected move, we'll go over that here in a minute, but this is what we have on the chart, and this is just zoomed in for folks who maybe on phone or smaller screens. You can see I want to keep perspective. That's why I stay zoomed out a little bit at first, but you can see here, this is the high, lower high. Are we making a lower high here? Possibly, but we've got the low and lower low. So lower high, lower low starts a downtrend. Not too hard. Now from the 4 hour, like we were talking about, there's not a, excuse me, let's make it this easy to see. There's not a higher low that's been set yet, right? We thought yesterday might have been the higher low. If we would have went 2 up, or up to the upside on Thursday, that would have locked this in as a higher low, and we just continue that uptrend. But right now we're just still looking for that lower high to be put in. So we've got that little sliver of a gap that's left here. We've got 2024's 50% level, which has been a major support resistance level for us for the past few months, as possible bounce point as well. And then we do run the chance of coming down and closing the gap from Monday morning, I believe. So it's still plenty of room on the table to come to the downside, and even if we fill this gap, we still haven't made a lower low. The low that we would have to go below is down here at the $42 level. So we can get all the way down to 42 without making a lower low. And then if we bounce, and start making higher highs, then we're still in an uptrend technically. So just want to put that out there. We've had some questions about where we think it's going to go. We don't make those type of predictions. This channel, if you're familiar with it, if you're not familiar with it, we don't make predictions. We just set triggers and targets in both directions, right? So if something triggers to the upside, okay, we take it, and we take it to its target. If something triggers to the downside, all right, we'll take it. We'll take it to the downside. Now that's for more of a day trade, intraday, overnight swing, short-term trading perspective. We've talked about on the higher time frames how we're still bullish, right? We're in bullish patterns. So from that sense, we do still expect price to continue to go up until something were to change on the higher time frame levels. But just for those who are wondering, we don't get into predictions, especially on I think the question in last night's video was, do we think price will go up by the end of next week? It could. But I'm not in the business of predictions. I just take price wherever it goes, right? So I hope that it gives a little bit more explanation for folks. But again, to kind of zoom in here, looking on the 4 hour, for those who are on the smaller screens, right? We let's make this a little smaller. There we go. We can come all the way down here to this $42 level before we put in a lower low. So plenty of room to come down. On the day chart, same type of thing, right? 42 areas where that higher low was put in, or this set of higher lows, right? This is that holiday bull flag that I was talking about. Let me make this bigger. It might be a little bit easier to see. And I'll bring out the tool, right? So here's the bottom of the pole. Here's the top of the pole. There's the bottom of the flag, and you can see the flag out. And then there's where our fib extensions are at, right? Okay, so that's what I'm talking about when I talk about the holiday bull flag. But anyways, that's basically what we've got from today's price action, as opposed to yesterday's hammerish doji. We've got a more solid red candle, no real wick above, just all wick below. I'm saying a wick below, not all, but the wick is about almost half the size of the full candle. So it is bearish, but again, not the worst thing in the world. We did bounce off of the lows. So let's go ahead and take a look at the week chart. We're kind of setting ourselves up for 3 2 up, 2 down, right? So we've got to see how Friday goes. If we get another down day on Friday and we finish the week with a red inverted hammer, there's a pretty high probability that the next week we'll go 2 down and we get this 3 2 up, 2 down reversal. Now again, it's not going to bring us all the way back down to 34, 30, 28, those levels. The expected move for that would be the low of this 3, so back down to this $42 level, which again, it's okay. Even if we do trigger this 3, 2 up, 2 down, if we don't reach full magnitude, that's bullish, right? Because that means we have the possibility of setting this 2 down, or possible 2 down next week, as a higher low as we continue to move higher. So again, not in the prediction business, just showing what can happen on both sides of the coin, and just being ready to go either way. So if we do finish a red day on Friday, take a stab at a couple of swings over the weekend into Monday and see where we end up, or wait till Monday and see if we actually triggered the 2 down, right? Because there is a possibility that we just go 3 failed 2 up, and in the strat world, what we call a Momo shooter, with shooter just being an inverted hammer, Momo meaning momentum, we could just have a Momo shooter, right, where we go 3, 2 up, 2 up, and we just continue going up. But we'll see next week. But how tomorrow's price goes will be a big factor for us. If we look at the, I guess that's really all we can really say from the weekly perspective. If we do look at, again, let's activate this so it's easier to see. Here is the April 7th bull flag, right? April 7th low, flag pull, flag, and we popped out of there. And you can see this week we hit that 150 fib extension almost to the cent. So perfectly reasonable to expect a pullback here. Another thing I want to show is, right, this is essentially the range that we've been in since we popped out of that bull flag back here in September, right? So, oops, come on now, work with me. There we go. So of this range, here was a little, right, here was like the low of the range. 46.79 was kind of the high of the range. Here was this look above, fail, look above, fail, look above. We haven't failed yet. Could a pullback next week be to just now make this 46.79 a support level instead of being a resistance level? Possibly. So let's let it play out. But again, I'm not very bearish, especially from the week on up. I'm not a very, very bearish person on those time frames. Looking at the month, let's clear out some of these lines here. There we go. Looking at the month, again, we're still in good shape. Yes, there is the possibility of a 1, 2 up, 2 down happening next month, but as of right now, this just looks like a Momo shooter for us right now, especially because it's green, it's not even red. So we could just have this 2, 1, 2 continuation that happened, and we're just continuing to go up, right? We did lock in November as a higher low by going 2 up above the high of November. So kudos to us for that, and we've gone above October's high to lock in a higher high. So we got higher low, higher high. We've got an uptrend on the month chart, at least the start to one, right? So everything looking good there on the month. On the quarter, if you're familiar with this channel, you know what I'm going to say. We've triggered the 1 combo 2 down, combo 2 up, right? That triggered at 36.15. As long as we're above that, the magnitude for that move is up here at 70.08, right? Because this 1, 2 down, 2 up, the magnitude is not the high of the 1, but the candle to the left of the 1. So that's 70.08 up here. And then that brings us into the year where we have triggered the 2 down, 2 up. Oops, get that out of there. Get that out of there. We triggered the 2 down from last year, 2 up this year. And the magnitude of that move is the high of the candle to the left of the 2 down. So if we go to 2024's candle, that high is 70.08, right? So that plays in with the quarter. And if we get above that 70.08, we start looking at the all-time high of 74. But for now, we're just looking to maintain. From the yearly perspective, we want to get back in force on this 2 down, 2 up, right? We close at 49.65. The high of 2025 was 50.70. Yeah, 50.76. So we've got to get back above that 50.76 level to be back in force, which would make me a lot more comfortable that we're not going to do some type of failed 2 up and then 2 down in 2027. But again, that's way far ahead of us. We're just only in the first full week of January. So again, the main thing is just get back above that 50.76 so we can be back in force and looking for that 70.08. All right. Let's go ahead and take a look at the market maker's expected move for Friday. To do that, we will bring out the options chain. This is Thinkorswim. And if we go to the option chain for January 9th, we go over to the right-hand side. There's a number in parentheses. That's 2.49. So plus or minus 2.49, I should say. So that is the market maker's expected move. Now, again, that's just a result of looking at options interest. So $2.49 doesn't mean that's all we're going to move tomorrow. We could move more, right? We could also move less, but we could move more. That just means 70% of the time, we will stay within the market maker's expected move. Let's go to the notes so we can see what that looks like as numbers, right? So for Friday, January 9th, there will be 246 trading days left in the year. The close price on Thursday, January 8th, was $49.65. And we know that the week is, got to make this green. The week, because the week is red. We went red this today. Let's go show colors. We'll make this green. Sorry about that. I should have done that in the prep. But the week will go back green at 50.35. But right now, the month, quarter, and year are all green. It would take 45.13 to flip all those red. So not a whole lot, not a long ways away, but it's still far enough away that I don't think it'll happen tomorrow. But we'll see with those economic numbers that get released. Expected move for the week puts us in a range of 52.25 to 42.23, so we're obviously still in that range. And the range, the expected move for just tomorrow by itself is 52.14 to 47.16. All right, so if we go back to the chart here, let's go to like the 4 hour. We can see we've got them marked out here on the chart, right? So, oops. 52.14 is up here. That's market maker's expected move high in this orange dash line, small dash line, and 47.16 is down here in this orange dash line. So that would imply that the market makers do expect, or options chain expect price to go lower, but it could go slightly higher. Actually, this expected high is above yesterday's range. So yeah, we could have a 3-day or a engulfing day, right? Whether it's bullish or bearish, who knows? But the market maker's expected move, if we were to move the whole range, would give us a 3 on the day, an engulfer on the day. So that's how we've got it charted out here on the charts. Let's go to the 5-minute, zoom back in here, and let's take a look at the scalping chart and get prepared for tomorrow's action. Let's get out the right tools here. Okay, oops. We're already on the scalp chart. There we go. So for tomorrow, on our chart, we have the 4 hour markers out here. Oops, am I on the right chart? Yeah, scalp. Where is the... Oh, okay. I don't know why. All right, anyways, we've got our 4 hour markers, right? We've got previous high a day from Thursday's high, previous low a day from Thursday's low, overnight low, just hypothetically right now is 49.25. Overnight high hypothetically is 49.85. And so from there, this is where we use our proven and repeatable strategy to make a play, right? So let's say we open in the middle of overnight range and we push up. Let's say we push up to maybe overnight high and we get a little bit of a pullback, but we end up getting a higher low on 5-minute, 15-minute chart, something like that. You want to go ahead and enter calls, right? Because you're getting a higher low at or above your opening print level. So a higher low at or above opening print, you look to get into calls, and you target overnight high and previous high a day as your targets. Same thing to the downside, right? So if we push down, maybe we get a bounce off overnight low and we pull back up, but we get that lower high at or below opening print, we want to get into puts, first targeting overnight low and then previous low a day, right? So very simple. If you stick to the rules, yes, you may take some small losses here and there. If your risk to reward is right, you don't want to just be putting 1-to-1 risk reward out there. You want to try and find something that's 3-to-1 or something like that, 2-to-1 at the very least. So that you can take a small loss here and there, but more often than not, this ends up working out in the right direction. And if you're at the money, in the money, multiple contracts, you can make some pretty decent profit. Let's go ahead and go to the 4 hour chart so we can take a look at more of a day trade, longer day trade type perspective. We've got kind of a busy chart here, but the levels are playing out, right? So On the 4-hour, we've got this 2-1 that happened on Thursday. So if we go to the downside, that gives us a 2-1, 2 down continuation, triggering at the low of the second 4-hour candle from Thursday, and then the magnitude being the low of the day for Thursday, right? So same thing to the upside. We could have a 2-1-2 reversal where we enter at the high of the second 4-hour candle from Thursday, and the magnitude of that move is the high of the day from Thursday, right? So very simple entries, very simple exits. They do play into kind of just like we were talking about with the snowball yesterday in yesterday's video, where it, if we go to the downside, it triggers this 2 down, 2 down combo, 2 down, 2 down. One combo 2 up, combo 2 down, one combo 2 up, combo 2 down, that just keeps snowballing until the magnitude of this gap down here from Monday. That same thing is still in play, right? We triggered this one combo 2 up, combo 2 down already, and I'm just trying to make sure this is big enough for everybody to see without still being in proportion, right? So we had this one combo 2 up, combo 2 down that triggered. It met its magnitude here and went below it, right? See, we went below that magnitude, which then triggered this one combo 2 up, combo 2 down here as well. And that magnitude, again, is the opening of this gap from Monday, right? So we could, start snowballing and push to the downside. Do I expect to get all the way down there? Probably not. Maybe if we open like at market makers expected move low, that might be that, something that happens if, the economic numbers before the market opens are bad. Then, we could open up down there and then just kind of fall out from there and maybe even try closing that gap. Who knows? But that is the situation that's on the table. To the upside as well, if we get this 2-1-2 up continuation, if we reach magnitude and keep pushing, that triggers this 1-2 down combo 2 up, and the magnitude of that move is the high from Tuesday, right? So could make a pretty big move in either direction on Friday. I think a lot of it is riding on these economic numbers. So again, we're not into predictions on this channel. We just give triggers and targets for both sides. If something triggers to the upside, we'll take it. If something triggers to the downside, we'll take it. All right, let's go to the day chart and look at this. Again, I'm trying to stay zoomed in without losing perspective of where we're at overall. But we had a more bearish 2 down day than we did yesterday, right? We talked about yesterday how we had a doji, kind of a hammerish doji, what I call it, and it did finish green, meaning it closed higher than it opened. Today was not that, right? Much more solid red candle, no wick on top, well, a little nub of a wick on top, and then a wick on the bottom that's, about the size of the body of the candle. So it does show that the bears tried to push it down further than it went, and the bulls bought it back up, but they could only buy it up to a certain point, right? And now we're, back in this 50.76, this yellow line, that's last quarter's high, 50.09 in this green line, that's last month's high. So we're back in last month and last quarter's price action. The week is red, and we were talking about before this $45 level is where the month, quarter, and year will flip red as well. So if we flip down there and we get into that gap, now we've got full time frame continuity to the downside where the week, month, quarter, and year are all red, right? So that's not a situation the bulls want to be in. That pulls you back into this smaller broadening formation that was formed that second week of the holiday, the last week of December, right? This broadening formation that was formed here, then you fall back into that, right? So then you risk just going sideways in the middle of this range again. So you don't want to see that. But again, if we go to the downside, that's a 2 down, 2 down continuation. But really it's a combo 2 up, combo 2 down, magnitude being down here at 45, right? Again, market makers low, market makers expected move low, and 2024's 50% level, which has been that major support resistance for us for months, is down here. That could act as a possible bounce point for us. So don't get too far ahead of your skis expecting us to go fill this gap tomorrow. Let's just kind of play it by ear and see where it goes. To the upside, you would have this 2 down, 2 up reversal, magnitude being the high of Wednesday. But if you do get to that and above it, then you're triggering this combo 2 down, combo 2 up, magnitude being the high of Tuesday, and which kind of lines up with this daily broadening formation as well as this 150 fib extension of the April 7th bull flag. All right, so again, we can have a decent size move today, but I wouldn't get too far over my skis, especially once we get to Tuesday's high and 2024's 50% level. Those are the two levels where I'd expect either, more sideways action or a rejection or a bounce. So that's what we've got from the day. Let's just go into the notes here. Got enough charts. So we talked about on the 4 hour, if we go to the downside, that triggers a 2-1-2 down at 49.07, magnitude 48.13, which then triggers a 1 combo 2 up, combo 2 down, magnitude target being 47.70 and 47.16. Oops. I think I wanted to change that to 46.79. No, this is a 4 hour chart. So 47.16, right, on the 4 hour. To the upside, we would go 2-1-2 up reversal, triggering at 49.77 with a magnitude of 51.81. But that if we get to 51.81 and above it, that triggers a 1-2 down combo 2 up, which has a magnitude of 52.74. On the day, if we go to the downside, it would be a 2 down continuation, or a continuation of a combo 2 up, combo 2 down. Triggering at 48.13. Magnitude of the combo 2 up, combo 2 down is 45.08. But again, that's a pretty big move. We are still kind of, I don't want to say an uptrend because we didn't get that higher low in that 4 hour, but we've had that such a big bounce that in the face of that bounce and the support levels below us, don't know that we make it all the way down to 45.08 tomorrow. We did list 47.16 and 46.79 as possible bounce points. If we go to the upside tomorrow, that triggers a 2 down, 2 up at 52.74, magnitude of that move being 54.30, and then we've got some extended targets of 55.51 and 56.56 out there. On the week, we did trigger the 3-2 up, or the 2 down combo 2 up at 48.09. We're still above that, so we're still in force, and don't really need to think about triggering a 3 down or a red 3 on the week. We have to get all the way down to 42.01, but we'll keep that out there just in case something drastic happens with numbers and any type of catalyst tomorrow. So want to stay above 48.09, keeps this 2 down combo 2 up intact, and just continue to shoot for these higher targets. On the month, we are in that 2-1-2 up, made November a higher low. Went above that 50.76 level of October, so we did create that higher low, higher high, and this strat did trigger at 50.09 and reach magnitude already. So at this point, we're just looking for extended targets on the day chart. On the month chart. It's no longer in just some type of strat reversal. It reached its magnitude. On the quarter, we are still in this strat reversal, 1 combo 2 down, combo 2 up, triggered at 50.76. And ultimate target 70.08, like we talked about. And on the year, what's going on with that? There we go. On the year, we triggered that 2 down, 2 up. Let's take that. It's not bold anymore because we're not in force. We're not above that 50.76 level. Once we get back above there, that'll turn back bold, but it's underlined to indicate that it already has triggered, and the magnitude for that move is 70.08, right? So that's what we have for your triggers and targets for everything from a scalping perspective all the way up through the 1 year chart. Hope everybody enjoyed it. Tried to jam in as much information as possible without taking up too much of your time. Tried to make those charts a little bit larger for those of you on smaller screens, and we also tried to make the font size a little bit bigger here in our notes without having to scroll up and scroll down, right? So hopefully that has helped some people who have reached out about that. But just another reminder that, this video is free. So we do appreciate a free thumbs up from you if you do enjoy the video. And we are totally open to, comments, right? Constructive criticism, suggestions for things that we can do better. And, if we're doing something that you like, doesn't hurt to let us know as well, right? Never hurts to know that you're doing something right. Don't always want to hear what you're doing wrong. So, again, if you enjoyed the video today, make sure to give us a thumbs up. Maybe give the video a share to one of your friends that you think could help out. And, we'll just end the video here like we normally do. So if you're watching this Thursday night, we hope you get some good rest tonight. Wake up refreshed and ready to trade tomorrow. If you're watching this Friday morning or Friday during the day, we hope you got some good rest last night and woke up refreshed this morning. And we look forward to getting out there and trading with you.